Welcome to TradeTheMBI.com. This is John. This report is for the 21st, the brief President's Day holiday, and you can see that all we've done is exactly what I thought we would do, is just ease off a bit here as we took a little break from the initial rise move. We were still in negative shakeout, which means you've got a pretty decent chance that you're going to have some fill back. We also had the positive extremes, which we talked about. They didn't need to get filled immediately, but usually when you see a little bit of softness, that's typically where it's headed. And we already talked about the low right there that we were looking at, the 26.89 range. In fact, what was the low from yesterday? Might as well take a look at it while we're here. Just click on that price. We hit 27.05, so that it held to 27. Psychological support there. A break below it would be well, probably cause that carry through right down to exactly what we're talking about. That said, you can see shorts have activated a bit stronger into the setup, and we never get the follow through with long-term buyers yet. And that's just basically because we're at the wrong time of the month, as peculiar as that may sound. Maybe could move a little bit more towards that later in the day. Here you have the NASDAQ again outperforming. We talked about it outperforming from before. It only had the one positive extreme as opposed to the S&P having two. And it was just below the ABM value, and we came back down to it the other day. It's actually performing better than the S&P at this particular time. And the euro pulling right back into the zone. We talked about the positive extremes needed to be filled. It's got this wick that goes down. It could fill that, but I'm usually satisfied once it takes the main body of the open out, which it's done. You can see that we had the weakness come through with the steel dipping below right here as it was resetting, and now you have shorts pretty much overtaken, but you're going to have a reset of steel at that point, so it should give it enough oomph to support it. And TLT in the fade again, you can see that negative shakeout has not changed. Rates are going up. There's no question about that. And then, now there's talk about how far the Fed will go as far as rate hikes. That remains to be seen. I don't know that they're going to be as aggressive. I think you have Trump's man in there, so to speak. We'll see if he is playing ball or really wants to scuttle the growth aspect, because the reality is there's no point in getting ahead of the inflation. That actually would be a positive aspect, considering they haven't had it in a significant. This targeted idea of 2% was always I thought kind of ridiculous, because they never really achieved it during the deflationary period that we had in the no growth policies. USO, okay, so we had the big dip that came through, filled in right back to our last positive extreme right there, almost to the penny, and bounced off of that. So what a surprise. Is it likely to stay? No, we talked about this being a short life situation, but it's still positive right there. You have the steel going above, it hasn't moved back below, and also you have cyan under the midterm buyers, so shorts are not really working that hard on this. They took their gain, they seem to be happy to lay off for a little bit. And gold, we talked about the positive extreme there getting refilled. It's kind of reached a stasis point until they see some significant movement on inflation. That one-time move with the oil drop, these guys aren't stupid. They can see the same things I'm talking to about, that you're going to get a fade off here in the later middle part of the year as far as inflationary pressures, which if the Fed isn't stupid, they'll recognize as well, which would cause them to want to abate the idea of excessive hikes, because there just really isn't a reason for that. Now, as far as the market goes, we've seen that pre-inflationary jump, as well as a dollar devaluation jump. So a lot of the value that's built into where the indexes went is correlated to that, and not even to the growth issue. So, people forget some of these added components, exchange rates, as well as, future value of money. I thought I'd throw a Bitcoin here. It was an interesting run. It had a huge span here underneath the cyan, underneath the red, meaning just full bull. So even when we had these semi warning spots, you had just a couple of every time that steel dips below, but it was always in the reset mode. until we got to this most recent one where the cyan finally broke above. It was an early warning as we started to break down. Could you have shorted that one? Absolutely, at the initial break of it, but you knew that it was going to be short-lived with that reset. As soon as that got back above the negative 13.5, moved up. Where it became more interesting is when we got into these secondary runs. Again, even though the steel has moved under, it hasn't reset to the lower parameters below that. I like to look for below the negative 7.5 at least, and definitely the negative 13.5 indicates that you're going to get a continuation. And you sure as heck saw it as you got towards the peak, and you ended up doubling that up with the DOC spread. So you had a couple of DOC spreads right here, pretty close to the same ranges. You would have taken still some heat on that, not unexpected, and even at this particular point was at the 76. Made a new, well, it wasn't a new high, it stayed at the same high, and then plummeted all the way back on the rising lows in this particular case, as opposed to when they're flat. So you get the flat high, rising lows, usually calls for a move back down to at least 50%, which was the initial move, right straight to it. And then no signaling for a positive move there, so it continued to go down. A brief positive stint right here, but that steel's coming back down on the reset, so should be positive until we get a dip below the cyan. Hasn't happened yet. But it just points out even in the time we can follow it. So here was the day. It was kind of the abbreviated session, obviously, for the holiday. That was like nothing. It was just sort of like no interest. And then the day's action was just pretty much, we're still in this average weighted price range where you're a little above it, you're a little below it. But the trend moves when it's happening. They've been okay. Even the short-lived rallies, been decent signals. It's just you're in an erratic daily setup, so you don't get as much clarity. So you just have to take what it gives. And when you can see that we were heading for that, and we've talked about it, it's just an indication. You can either step back if you're not really active into doing the small time frame trading, or you can move into a different strategy zone, a little bit broader term, and then it's still going to be the chop. There's nothing you can do about that, because it's just going to take a while until it develops clarity in the overall setup. So this is what I was pointing out. There are points at market intervals that are more interesting to trade than others. This is a less interesting point than when we had the beautiful power move before. So we take it as it comes. As always, though, it's moving along. There wasn't anything of interest to point out about these setups here. Still somewhat weak compared to being positive with the shakeout. So I think you're still looking at a little more soft erraticness. So that's the state of things as it is right now. If there are any relevant charts, I will put them up. As always, trade well.